Yo, what's up you guys, welcome back to another video. Today we're going to talk about retail sentiment. Now this is part 3 of the 4-part video series that I'm doing. So part 1 was fundamental data, number 2 was order flow, this is retail sentiment, and next week I'm going to do technical analysis. So without any further ado, let's get straight into it. So the first question is, what is retail sentiment data? So retail sentiment data is basically retail trader positions in the market. So it basically tells us exactly whether we as the retail traders are buying a certain currency or whether we are selling it. Now, the last time we spoke about order flow, right? So order flow data was the big bank positions in the market. Now, if you watched the previous video, you would have realized that the data for the big banks are released on a Tuesday, right? They place that positions on a Tuesday, but it only becomes available to the public on a Friday. With the retail data, it's the same data, basically tells us whether retail traders are buying or selling a certain currency. However, this data is updated on a daily basis. So what does that mean? It basically means that these big institutions is capable of seeing what retail traders are doing in the market so that they can go heads against these players in the market as well. Now, you'll find this data on a website called MyFX Book. You can basically just search for the retail sentiment MyFX Book, and basically you'll see the data is all being lined up over here. Now, it's very simple to read, right? You can't use this as a standalone strategy. You basically use it as a confluence, as part of the build up to you potentially looking to buy or sell a certain currency. Now here, for instance, it's very easy to read. So if you put your mouse over the currency that you want to look at, now if you put your mouse over Euro USD, you can see that it says symbol, action, percentage, and that's the only two things that we actually do care about. Now the symbol is obviously in this case Euro USD. The action is short and long. Now if you looked at that COT report that I have told you guys about in the previous video, you'd have realized there it also says short and long. Now in the market, short means to sell and long means to buy. Now in this case, we can see that we have 84% of retail traders selling Euro USD and 16% of traders buying Euro USD. Now there's probably a high possibility in this case that Euro USD is probably going in the opposite direction compared to what these traders are expecting it to go. Now you can clearly see that we have about 84% of retail traders who sold Euro USD, and you can clearly see here, based on the most recent price action, there was no there was no selling taking place. Market broke above resistance, came back, tested it as support, and now you can see that 84% of retail traders is either running in a drawdown or they have been liquidated, right, by these big institutions. Now the way you want to use this data is you always want to make sure that you're on the opposite side of what retail traders are doing. Why? Because retail traders don't have the liquidity or the finance to move the market. So you cannot go after people that is not moving the market. So, and because you are trading against very big institutions, you obviously want to make sure that you follow the smart money, right? So in this case, you will always want to be on the opposite side of what most retail traders are doing. If retail traders are selling, you want to be looking, you wanted to have looked for a buy. Now if you take this information and you line it up with the technical with the order flow and the fundamental data. So Euro USD is expected by retail traders to go weaker. They expect it to go weaker. Now, if you look at the fundamental information that revolves around the dollar index, the Feds are less likely to raise the interest rates. Therefore, we expect the dollar index to weaken. Now, apart from that, from a technical perspective, we also have a market that is trading in bullish territory. So based on the fundamental data, with the Fed's not going to hike the interest rate, is going to give a weaker dollar index. Then we go and look at the technical analysis, so we can see that the market broken above the resistance, tested it as support. You can obviously expect that continuation. And then you come and look at the retail sentiment, and you can see how incorrect 84% of these traders are. Hopefully 84% of them watch the video. Also, another thing is, I've been receiving a lot of questions on Instagram with people asking about mentorship and signals and all of that stuff, right? One thing I do want to say, you guys know I only provide free educational content, and I will continue to provide that. However, I am going to look at putting something together, maybe like a, what you call it, a Q&A kind of thing, per week, like on a weekly basis. I'm obviously gonna add a lot more stuff to it, maybe say some of my setups and all of that stuff, but that will be for the people who can't trade, right? So I'll speak to you guys more about that, as I've started to put it together. But that's more for the people who has all the information that I provide, but they still can't trade. So I'm going to put something together, and then it's gonna be a bundle of a couple of things that will be added there. Then I will come back to you guys with what it is that I'm going to do. But for now, thank you for your time, and as always, cheers for the ears.